So today it's generally accepted that it's very difficult to borrow for business, for productive investment. But that isn't the only problem. It's not just the difficulty of getting loans. It's also that a lot of bank lending is likely to be withdrawn at short notice. And thirdly, when loans are made, banks often demand collateral, which if you're a small or medium-sized business, invariably means signing over your house. Now, Germany has institutions that overcome these problems. It's easier to get loans in the first place, they're less likely to be withdrawn at short notice, and collateral is replaced by guarantees. So those are three rather important points. I could have used the Swiss cantonal banks as an example. Even some American local banks have some of these qualities too. But the Sparkassen are the best examples. I think, as you've already heard, the German savings banks, narrowly defined, they have about a third of all bank assets in Germany. So in other words, it's an important part of the German economy. They have about 40% of all customer deposits. They make 40% of all business loans. And the last figures I looked at, they made 56% of business startup loans, which is tremendously important in encouraging vitality in a country. They operate only within a local council. They can't lend, or a geographical area, which is very often the boundary of a local council. They can't lend outside. And during the recession, they increased their loans to business, whereas the big commercial banks like Commerzbank and Deutsche Bank and so on reduced their loans, just as our big banks did here. The really important thing, and the thing that would be tremendously useful to us, is that they empower people in localities to solve their own problems. So by taking local deposits and lending them only to local businesses is one of the reasons why Germany has been more successful than we are in getting out of the recession, the 2008 recession. Our banks are more inclined to suck money out of the regions. They suck money out of Manchester and Birmingham and Newcastle and Leeds and gamble with it all over the world. It will be quite a simple matter for us to take this model and apply it in our own country so that people with energy, entrepreneurship, determination could have the power to make a difference. Losses are avoided. This is the important thing. They are efficient banks because losses are avoided because they make loans based on reputation. Very often the people running the banks knew people at school. They know they operate their bank account and they know that they are reliable recipients of the loans. There's a bit of a risk in that situation of having corrupt local relationships, maybe a local political party getting soft loans from the local Sparkassen. So the other very important thing to understand is that the National Association plays a tremendously important part. So it isn't just having local banks, which is vital, it's having a National Association to supervise them, which is very important. And the way it's been explained to me by Thomas Keidel and others is that they don't have top-heavy, what sometimes is called tick-box-style regulation in this country. They operate by draconian penalties in the few cases where people go wrong. So there'll be a warning, and the warning will be, you do that again, you will never work in banking again. And that is a real threat which matters. And you have to have that, otherwise local banking can easily become corrupt. You can easily get soft loans being made to politicians and others, which is why a lot of American local banks go bust. Lessons for the UK. These ideas have been floating around for quite some time. We used to have these local institutions, the trustee savings banks, were not exactly like the Sparkassen, but they were similar. And funny enough, when they were privatized in the mid-80s, because they were all part of one group, there was one TSB didn't join that group back in 1975. That was the Airdrie Savings Bank, which is still there today. And we can get a bit of a hint of what we lost by just looking at that bank. It has about 8 branches, it has 60,000 customers, it's not huge. It only lends to local businesses. 80% of its loans go to local businesses. 35% of them are for 5 years or more. So in other words, you haven't got this problem of short-term loans and banks demanding that you take a loan for a year and then they want to charge you a huge fee to renew it. They only lost 1.7% of their loans in 2010. And more importantly, they increased their lending to local businesses during the financial crisis, unlike our own banks, which didn't. So loans are up from 28 million to 36 million in 2010. Just one final point, even though I've been told to stop, is this, that the average amount of savings deposits in this country is £42,000 per household. There's about 400,000 households on Tyneside. If 40% of those people saved that amount of money in their local savings bank, savings and enterprise banks, that would be £6 billion. That's a huge amount of money. So the government's own business bank has only got 1 billion. The regional growth fund has only got 2.6 billion. 6 billion focused on one small area like Tyneside could make a hell of a difference.